Welcome to TradeTheNBI.com. This is John's reports for the 18th of March. Big happy birthday to Isabella, turning 18 today. I know her mother would be very proud of her, as am I. Just an incredible time, though, given all the circumstances that are surrounding it. Here we are. We keep hitting back up against that 2505, and when we come back to it, just gets rejected. Now, of course, you've got the government just throwing everything they can at the situation. How much good it will do is very tough to say, because at the end of the day, even if you throw money at some of these companies and stuff, it's going to be a while before there's a real clear understanding of where it takes things. That said, we're still orange, stuck between cyan and red, and that's a continuation move. Now, sure, we're seeing midterm buyers starting to pop into this setup, and that I think we can see is the Fed starting to take action, even red DOC turning up. It will form a P2 pivot, because it will be a higher pivot if it gets up, but it's got to get above that negative 13.5. We're not there yet. Interesting. It's off of rising extremes, which is what you look for down at a low period, but you've got to see some stabilization before you can expect any kind of continued up move. The reality is, even if you throw money, people and everything else, the reality is that it's still an unknown how long there's going to be dysfunction in the economy, and so we just have to go with what the readings are. NASDAQ faring a little bit better within this broader configuration. Though I did see Amazon just announced they're going to stop deliveries as well. The euro, at some point everyone's going to agree the ECB is broke, so is the U.S. Fed going to bail them out like they did in 2008? It's pretty good likelihood, because otherwise the entire world just pretty much gets destroyed. The only other alternative is just freeze debts or just eliminate them. I don't know what else you're going to do in this particular case. There's still so many people out there that are thinking this is not a big deal. This is a hyper reaction to this virus. I don't think you would find that to be the case for anyone who's been in portions of Italy. We don't know about China because we weren't there, but we can see what's happened in Italy, and it's not as benign as everyone wants to make it out to be. And while they you're going to have people that are saying, oh, there's only a few people who have died in America. Well, thank goodness right now, but we'll see in another couple of weeks what the situation is and whether there's an escalation. There's already begun some distancing in that. Hopefully that prevents that exponential growth that we see. You figure it was 3 weeks ago that there were 27 cases in Italy. 3 weeks later, 27,000. That kind of growth rate has been substantial, particularly if it's concentrated in any particular area. So we'll see how that plays out. The euro, well, even before this, we had talked about the euro still needs to come retest this positive extreme down here at the 108 range. No reason to believe it's not. This is going to be really interesting, despite the U.S.'s claims. We don't know how long it's going to take before they can buy up the oil from the for the reserve and stuff like that. They tried to give it as a buoying effect to talk about, but this is purely deflationary now at this particular point, and that's problematic because you create a whole different spiral setup going through there. From gold, having made the new low, again, it's going to be a bit more of a safe haven when there's a concern about liquidity, and this is the real issue that we're getting, is this bank situation, lending, and the counterparty risk, and whether or not they believe that there's going to be insolvency issues. And this is the same problem we had back in 2008. So will we have learned any of those lessons? Remains to be seen. So intraday, there was a lot of activity. We started off with that nice pump. I missed it because I was getting some needed rest because I've been trading quite a bit, but I was up early enough to be able, late enough actually in the morning to be able to take the short that came through. It rebounded pretty darn strong and quick on that setup, and I said they were going to try and get back to the highs. We weren't able to do that, which meant we were going to make new lows, so that was sort of baked into the equation. And you can see from the extreme dip below the red line, that dotted line coming across, and then we just started cascading lower as we were making further dips, but then Made a nice P2 pivot coming into that setup, got back up to 23%. Shake out above the negative 13. The gold on there was a decent opportunity to take the run. And this one, they were able to bring it back to the highs and actually make the new high on the promise of throwing money into actual Americans' hands. Novel idea, something they probably should have done back in 2008, would have been far more successful. I've always argued that despite their belief of moral hazard, the moral hazard really was with the banks, and they should have just paid people's mortgages for that time period. You would have saved 4 million people from becoming homeless or losing their homes. That would have been a nice thing to have done with that $1 trillion then, because all it did for the banks was make some bankers billionaires and very wealthy. History tells us, so doing it differently maybe would be a nice way. This was an interesting DOC spread coming through here. This last one was a little tougher over here at the left of the screen here, because we were still above the negative 13.5, and we'd had the cross of the steel coming below cyan before. The difference, what I look for in this particular case, and there's two spots you could have done this, is when you dip below the negative 13.5, I look for that move back up above. In this case, though, the cyan had not crossed yet. When it did it here, that was good enough. Even though we had the plus 13, it wasn't enough to take a sizable position, because it could still come across. But in this case, it started to go, and once we had the dip below the red line, it continued and did produce this one. It's not really any way around it, because everything about it was good. You had the P2, rising 0% Fibonacci line there, and everything was looking strong with it, but it immediately spidered, and it was just nothing you could do. I mean, you're going to get situations like that, and this is where it flipped against the algos, but all it did was make a little bit lower low, and then it built it up again. And this is what happens when we see intervention moves from the Fed. We saw this back in 2011, and that as well, where you get some inconsistencies that'll go counter to where the algos were headed, and that immediate reverse, it was effective because it created enough short cover to really push it all the way back. It wasn't quite enough to really propel things and maintain them above. I mean, it was a strong return. It just, you couldn't break new highs, and when you can't break those new highs, this is what I was talking about. Within these short periods, we get these bounces that come up to, the Fed stops, thinks that they can, sell into the short cover as they get their peak, but the problem is there's just more supply, and you end up with the same moves back. Now, at the end of the day, similar situation here. We ended up with the DOC spread and never got back above the 13.5 on the magenta and that, and so when the DOC spread came, it's fine to take that one, and boom, this is where we find ourselves right now. We're off about 30 points, plus or minus. Basically just filling in, dip below the red line. It was all the way back here. So, fairly clean. It's doing kind of what we expect given a short configuration. I think we still have a couple of these numbers. You have that 2505, you have the 2519 algo that we have here from the intraday charts. And then just a variety of these other positive extremes that were created during even today, and you can start marking them as like right back here. And then as they get filled back in with the dips, then they just get knocked off the list. It's pretty consistent to this kind of activity you get as you're trying to base into it. We saw a lot of this in 2008, and I encourage everyone to go back and look at those charts, because it's worth seeing that you're going to get these volatile moves back up as the central governments try to intervene. You just have to look at this broader picture of where do things look like a month, 2 months, 3 months down the road, and even now the president is saying that this isn't going to end, before June, July, and that. So, think about it in those terms. How soon before there is a recovery, before you're getting people back to doing a normal routine. I mean, barring a vaccine, there's just going to still be a lot of fear lingering. And of course, this is all going to depend on whether or not the spread numbers bear out and you start to see overwhelmed hospitals and or an increased death rate. If that doesn't happen, I think that people will, may turn around quicker for people to get back and do things. They may just find it to be a bit overdone. But it's one of these things where if you prevent a terrorist attack, nobody really gives you all that much credit for containing it. If this doesn't break out because of these actions, then a lot of people will be healthier and saved, and nobody ends up being the victor because there's going to be an economic price to pay. But if this still gets out of control, even for these measures that have been taken, then people will be like, well, we should have even done more. And of course, it's hard enough as it is for people to accept it. It's hard to convince, that, well, no one wants to hear that, things are going to be going bad. We've been listening to a lot of the different critics who are now like, oh, I told you so. But at the end of the day, they've been saying that for, 3 years or more, that we were going to have, massive recession, blah, 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 blah. And that just wasn't baked into the cards until this happened, because everything was just going along just fine. So that being said, we're just going to keep attacking this as it comes, because like I said, even back from 3200, you could have just bought your puts there that were long dated, meaning either leaps or multi-month, and you'd be still fantastically fine. So that being said, I'm still trading it in between. As always, though, I will keep you updated with charts relevant on the Skype chat. As always, trade well. We'll talk again later.